Okay. Shall we start now? Okay. Then hold your sit. Okay. So we'll cover one process today, which is trade processing. Okay, why trade processing and what's that? We'll discuss in details. See, most of the people they do the job with as a fund accountant, they do the job with fund admin. Fund admin is one of the functions which they take care of accounting and reporting stuff for a fund businesses. Okay. And on a daily basis, we'll discuss about little bit about the fund admin and the fund accounting stuff, so how the structure it is and all. See, in a system, this the way that the funds businesses they have developed a system. I'll give you one example here. So what we do exactly as a fund accountant under the fund admin. We have discussed the upstream teams, right? As a fund admin, so they provide accounting services to whom? To fund managers, right? Then investors and funds. Funds. So it could be your mutual fund, hedge fund, and P or any other funds. Correct? So try to understand because most of the people are not able to understand the structure. So what types of accounting they are doing and for whom they are doing, right? See, let's say in a one fund, so the total investment is around. What the fuck? 100 CR. This one is the total amount. This is the 100 CR. And the fund managers, they have contributed almost 20 crore, let's say. They can contribute more than that and less than that. That is purely depends on the PPM or agreement between two counterparts, investors and fund managers. There is no restrictions. For a mutual fund, also, you don't need to define that the investment and also you can invest the whatever amount that you have got of funds and the private equities and hedge funds where that you need to sign the agreement with the fund managers that how much investment that you want to invest as an investor. Okay. But in this example, we have taken which is 100 crore total investment or fund size and the investor want to contribute 80 crore. This is the structure. Most of the people what they believe they do the accounting for funds only. I'm not saying that they are not right. We do as a fund accountant, we do the accounting for funds for 100 crore. But what about this fund manager's account? So don't you think that we'll have to do the accounting for this 20 crore as well and this also 80 crore also? Otherwise, how you can match your accounts if you are not doing the accounting for the fund manager's fund and investors amount? Correct? So, no, because see, every day investor want their own amounts, the realized net assets of their investment portfolio. What's their actual investment? They want the status of their investment. See, at a fund level, if you can see at a fund level, what would be the expenditures for a fund? Broker fees, right? custodian fees, agent fees or agent bank fees. We have seen this banks and all, right? And they charge fees to the funds. Management fees, incentive fees, broker, custodian, agent, audit fees. Then apart from that, the fees, director fees, right? Exit load, entry load, and other fees or expenditures that you can say. See here also at fund level that we will have to record the different expenditures also including the fund accountant salary, right? Because actually fund accountant is providing that accounting service to the fund. It means to this fund, to this 100 crore amount. So that the expenditures, your salary expenditure also should be recorded in that books, correct? But at a fund level, let's say for example, on this particular 100 crore, you have received 2% as management fees. So you're saying that just we need to do the accounting under the fund and we'll do this, that's it, and we'll charge 2%. So means we'll accept the fees from the fund managers and investors to the fund account, correct? 2%. 2% would be 2 crore. So it means if you split this 2% into 20 and the investors will pay the 1.96 crore fees and fund managers they will pay the fees which is 0.4 crore to the funds, correct? And this amount entire 2 which will receive to the fund as a fees. Let's say you're not offering accounting services to the fund managers and investors portfolio, and you have received this 2 crore, then how are you going to apply the accounting treatment then? As an accountant, you need to have a ledger in your system, right? That someone have paid the fees to you or send the money to you against the investment of investors and all, correct? Because this investment is not yours. Or if you think from a fund side, and let's say you're a fund accountant and you're working for this fund, this 100 crore is not from the fund. This 100 crore is from the fund manager's contribution and investors. So it means you're managing the asset for investors and fund managers. The fund is just an account that you can see all the fees, activities, investments, capitals. See, this 100 crore would be the capital, simple. And this all would be the expenses and losses. Loss depends if you see any loss on the fees part and all, receivables, payables on that part. But you can treat as expenditures. If you're recording only one side entries, then what about the others? What about the ledger? See, in your system that you need to record all 3 accounts. You need to have all 3 accounts or ledgers. The fund book plays the role as a main book where you can record each and everything. But in the investor's account, you can record only the portion which the investor paid to the fund. Correct? If you are working on a Recon part, how you match the transactions? Once the agent bank, let's say, let's say agent or bank send the payment to you for 100, and in your system, your system ledger is showing as the 90. Would you be able to match that transaction? No, right? The point here is your bank statement or agent bank or this fund statement work as a statement or book work as a statement. You have your salary accounts. What you do? You pay the payments from the salary accounts, right? If you have paid by fees to my account, it means while doing the recon, you will check the transactions reference against the statement that you have from the bank. And you can check the transaction amount, date, credit, debit side, right? And that's how you can perform. Yes, I was that means that you need to transfer the 7,500 to me, that you have transferred to me. Then you will check the reference number in your books of accounts. So it means in your statement. That's what we call bank statement. And apart from that, you checked my not account reference number, or else you will escalate to the bank that can you please, if let's say instead 7,500 you had transfer me the 9,000, and you realize after that he already has sent instructions to the bank to transfer the 8,000, but that was the incorrect amount. Only I was payable the 7,500. Then you gonna reach out to the bank, send the new instructions, ask for a you will then request to the banks to ask to the counterparts to reverse the first payment, means to me, right? And then once the payment reverse, and let's say that now let's say the final amount is whatever it is, let's say 7,500 or 100, and if it is matched, then you're gonna match that transaction. So it means you need to have the other counterparty details as well to maintain the accounting in your books of account. And let's say in that particular transaction, the reference number is missing or the data is missing, then how are you going to say that you have transferred that amount to me only? And here also, if you don't maintain the investor's account or fund manager's account, here how can you say that this 80 crore investment is correctly recorded? If you don't have accounting records in the books of account, it means the system. With every fund, they have a three applications that you can see. One which is for a live database. Database which is connected with the broker system. Once the broker confirm the trade, the trades will receive in a database, live database here. Trade receipt. And trade receipt means what exactly? Trade date, quantity, amount, price, ISIN, and reference number or issuer name. That's it. Here the executive will approve it. So once you approve it, then the accounting record will create. And then your middle office team start to work on it. So middle office team will pick the trades and they will work on it. Correct? So that would be your accounting system. Okay. So once you approve the trade, your trades entry will be created in accounting system. And what are those? Those are like Geneva, Genesis, right? Aladdin, Multiphone, MCS. There are so many accounting systems you can see. Every fund they have their own accounting platform. This is for an internal accounting system. Where you can record all the things. Buy, sell, income, interest, dividend, cash, fees, right? Payments, receipts. You need to record each and everything. Once you record in your internal books of account, and you guys are also you're working on accounting system, could be TLM, IntelliMatch, or any other internal accounting platform. 90% teams they work on this internal accounting system on this application only. You can see the different names of the applications. They work on an internal accounting system. Trade team, they work on it. So it means they add the trades, removal, addition, right? Trade settlement, again, they work on the process trades or book the trades. Income team, they add the dividend payment, they add the interest payment under that particular securities. Let's say Infosys Security and Infosys announce an interest payment or dividend, they add it. Fees, you record the fees, management fees, different transactions fees, assignment fees, agent fees, different fees, audit fees for that particular fund. So it means you need to record the fees under that fund and work process the fees to you. So it means to that particular investor account also. Correct. And once you record everything, assets, liabilities, everything, you can see another application for a reporting. And you can see the different team also to they generate the reports from the application, this particular application, review it with the system data, it means accounting system, and check it. If everything is matching with the reporting or whatever report that you have generated, then you can send that report to the fund manager. Here only 10% people they work on this portion, only 10%. Because it's a quite simple job. The system, this application will help you to generate the report in a multiple formats, like this format. You can directly generate this report. You can check the balances. This is not a report which is prepared manually. Directly you can generate it in this format. Means you need to update your system, accounting system correctly. Which one? This part. And in every organization you can see the similar structure. Few teams they are working on a live database or dashboard, or here you can see different applications also. Few teams or 90% people they are working, let's say corporate action team, income processing team, settlement team, fees calculation team, pricing team, or transfer agency team, they are working on this accounting platform. Apart from that, there are other teams, 10% stuff that it, or teams you can say they're working on a reporting, they generate the income statement, they generate the balance sheet, PNL and all, they generate the different reports and all, right? And your structure is done. Apart from that, for payment, cash payment or stock payment, if someone transfer the payment to you, to your bank account or to the agent bank account, so for that we have a different the facilities which is IntelliMatch, TLM, Duco, and there are many more. So those applications will help you to reconcile and match that you have received accurate payment to your bank account and to your Demat account. This is like apart from means there's 3 applications. You can see another one which is this the payment application. In every organizations, now you can raise your questions if you have on this part, which is the structure part, the applications. Any question, guys? Okay. So it means, see, now we know the structure, right? Applications and all. There would be a team, KYC team, account activation team, right? Maybe technical team, on asset onboarding team, correct? Account activation team, KYC team, fat cutting. Their team actually means technical team. You can means call by any names. They actually work on an account creation part for a fund, managers, and for investors by their names. That's what the KYC come into picture every quarter. We require what? KYC for each and every accounts to check the investor accounts details. So that should be updated the accounting system, and if it is not, then account will be inactive. Then how you gonna send the payments or accept the payments or record the transactions. If the account is in active status for XYZ investors, then you won't be able to add the record in that particular investor's book. Because it's mandated to allocate all these fees expenditures. There's two fees. Okay, these are the fees. There's two that already that we add into the investment, like a production expenses, right, brokers fees and all. This fees that needs to be allocated to the investors account, because investors, they are paying to us, and the recon is done like there's two balances. There's two balances should be matched with the main balances. Here if you see the addition of this 2, which is 2, and here if you can see only 1.96, then your accounting won't match. That's what you need to have all the accounts created in your system. Few teams, they are working on a fund manager's account because they have also contributed 20% and they are doing the accounting for a 20% amount only. Why? Because fund managers, let's say A, B, C, D, they are the fund managers, right? And here investors, let's say X, Y, Z, A. They contributed 20 crore each and the investors contributed 5 crore each. These are fund managers. So don't you think that we required accounting for this all the investors as well? That's what we have different teams. They work on the few teams. They work on investors. Few teams work on this particular the funds. Means they record all the fees and expenditures under the funds. Because all this there's two fees. These are the income for funds, and there's two fees. Those are the expenditure for investors. There's two for it. These are the investors. There's two fees. There's two fees are expenditures for the investors and income for the funds. Otherwise, if you don't record these two fees, then the fund will not pay the salary to you as a fund accountant. Okay? So it means we do the accounting for the conclusion of this entire story is we do the accounting for fund as well as fund managers and investors. Simple. And that's what investor allocation come into picture. Every day we work on investor allocation. Why we do this? Because we are accruing the fees on daily basis. So that accrual fees needs to be allocated to the investor's account. And that should be matched with the funds. Let's say you have accrued 2 crore fees to the fund, that same amount should be matched as a total from there's two investor categories or else from anyone. Depends, because with a few funds, the fund managers, they don't contribute anything. Then the fully fees will be charged to the investors only. There's two should be matched, and if it is not, then why? Because I'll tell you, fund admins, they provide accounting and reporting services to the investors also. So every day or every quarter, every week, fund reporting teams, they send the reports to the investors. So they check, they verify, and accordingly they escalate to you. And if you don't maintain the accounting for investors in your books of account, then how you can send that report to the investors? Nobody can predict on the basis of balance sheet that you have calculated the NAV correctly, because most of the investors, they don't know how to calculate the NAV as well. To calculate the NAV, it means to prepare the financial statements for XYZ funds. Then how they can interpret what is the exact value of my investment? So they want a figure. They want the exact number in a numeric. How much value is in my portfolio? How much fees that you have allocated? Because this should be the accrued fees for them. It's kind of liability that they should know how much fees that you are accruing. How how much that the dividend that you have processed, how much interest payment that you have processed, how much cash that you have processed to the fund, that you should know. And the daily job of fund accountant is to work either on a fund manager's account, investors or funds, and to check the allocation and prepare the financial statements accordingly. Okay. Now you can, till here, if you have any questions, you can raise it. Or if you are not able to understand, still you can tell me that. So I'll change my way to explain to you in a different way. Every day, yeah, it's a mandate to record every day because you're calculating accruals every day. It means accounting should be done on a daily basis because every day your security prices changes, correct? Then that means you need to record all the changes. Let's say, yeah. See, to pay the fees, that is different story. That is depends on the agreement. How they, in some cases, they pay the fees in advance. The management fees they paid in advance also. Whole year that we accrue it. We'll take that example in the fees chapter. But the point here is how the structure works. Right. If you are accruing the fees on a daily basis, if you are accruing the other fees and returns, everything on a daily basis, then that should be recorded. Everything should be recorded because your business is linked with the market securities and those securities are volatile. Every moment you can see the appreciation or the depreciation in the price of the securities. That's the reason as an accountant you should check, validate and record that changes in an accounting manner where you can disclose the real and fair value of your investment to the stakeholders. Stakeholders, when we say stakeholders, including investors, fund managers, and other regulators everywhere. Okay. So I hope now you have a clear that how we do the accounting and all. See, for investors, also we generate the financial reports or prepare the financial reports. That's what investors, fund managers, they pay the admin fees. If you join NT, Citco, Apex, Intertrust, SNC, they actually work for admin fees. Admin fees could be around somewhere up to 1% of a total under asset management, or that depends. Sometime that the fees will be fixed, right? Let's say 100 crore, 200 crore, 50 crore, 20 crore, whatsoever it is, the budget will be fixed. That's what in most of the fund admin, you can see they don't hire people still if they have a short on staff because they don't have a budget to hire the people just because the fees is fixed. And they made the salary to all the staffs from the admin fees only. Because how much fund is earning, how the fund is performing, they don't care. Means fund admin, they don't care about anything. Just as a fund admin, they need to ensure that they are doing accurate accounting and providing accurate accounting treatment as per the accounting standards or IFRS or maybe GAAP to all the financial items. That's it. The main whole story here is. Okay. So now I'll put one more examples, okay, to understand this allocation part, and I'll just finish the allocation stuff. This was about management fees. What we allocate. Let's say we have received. Let's say the fund decided to charge incentive fees. Incentive fees, it means it's a commission that we charge to the funds. We charge to the fund managers and investors. Why we are charging? See, accounting happen in two ways, but eventually the incentive fees will receive to the fund managers. But for accounting purpose, you need to charge fees to the fund managers units as well if they have contributed. Otherwise, if they haven't contributed anything, then the fees, entire incentive fees will be charged to the investors only. Okay. Let's say the incentive fees. Let's say 15%. For this quarter, we want to charge, our fund want to charge 15%. Calculate the total incentive fees on 100 crore. Let's say the total value is 100 crore into 15 and divided by 100. The value goes around 15 crore. So apart from 15 crore, the 20% will be charged on the fund managers. So you can divide that into 4. So what's this? And the rest because you can see the equal contribution, that's what will equally distribute this. So in such a way, we need to allocate the incentive fees to the investor's account also. This activity to allocation of fees as well as income, if you received any, because on a daily basis also you can see the unrealized gain and unrealized losses, right? If the changes happen in the assets, there would be 3 scenarios. One, your assets will be appreciate. Another, the asset will be remain at the same price. And third would be the assets will be depreciate. In a normal accounting, we charge depreciation to the assets, right? And what we do after that, we debit that portion of amount from the assets, and we credit and then we record that to the P&L, correct? On a debit side, because that actually there is a loss on the assets value from next accounting period or from a next year onward, the value of the assets will be changed. That's the reason we apply depreciation. The similar way that the same accounting logic will apply here. If we see the appreciation or depreciation means the change in the value that we record to the P&L, and the same that the whatever value is there that we allocate to the investor's account, because eventually that asset or investment is from the investors, and this we do on a daily basis. Let's say you had invested in or fund invested in the recently the future lifestyle securities, but recently what happened, the future securities, they announced they are a default on a payment. So in that case, let's say the purchase price was a security of the 100 for per shares, but now if you can check, future retail share price 22 rupees. From 100, you can see the depreciate in the value from 100 to 22. Then how you can record this and allocate this? The investment price was 100. In the books of fund would be 100. But now the current, this was the invested value. But the current value, which is something different. And how you would record this? ₹78, which is a deficit. Difference or deficit, and that is in a negative way. So it means it's an unrealized loss. And how you gonna record it? If you don't record this deficit to somewhere, then you are projecting or recording the incorrect value of the assets or the investment. Then it means you are not following the fair value adjustment or fair value rule while preparing the financial statements, and that applies on a daily basis as well. And let's say tomorrow, if the future retail they declare they want to delist the securities at a zero price, means this 22 also gonna be zero. Means you won't receive single penny from that investment. So it means the deficit would be 100. Let's say might be you would have a question that, or now I'll clear that question even. So 100, how you gonna record? You gonna record only to the fund? Then this amount will be zero. Then fund will be closed because you don't have assets. And the another point is, so don't you record that the loss, whatever loss that you have occurred on your investment, to the funds and investors account? No. We'll have to record this losses. So it means we'll have to allocate whatever loss happened, that this entire loss will have to allocate 20% as per the contribution, 20% to the, in the books of fund you want to record 100, in the fund managers books that you want to record 20, and in investors books you want to record 80 as a loss. And that's how Recon also happened. We reconciled and we masked it. And this activity we call investor allocation. Investor allocation. If you join any fund, there you can see the investor allocation stuff. Not only investors, here the allocation should be something like, if you're working on a master feeder structure, so there you can see the similar structure would be there, but instead the fund managers and investor, you can see the different funds. Let's say fund A, fund B. Fund A is a feeder. It's just a name. And this would be your master. Master will charge the fees to the feeders. Feeders will record in their books of account, and then feeders will allocate that fees to the respective investors account. So this is also comes under the investor allocation or fund allocation. If you are allocating the fees to the fund, that would be your fund allocation. If you are allocating the fees to the investors account, that would be your fund allocation. So that is depends on the fund and activity. Okay, apart from that, the allocation part, which is something, you can see the fund, they invest into variety of assets. Alright, let's say this 100 rupees that they have invested into equity, bonds, derivatives, right, and loans. $20, $20, $20, $20, and rest will be your cash. Equity from HDFC, bonds from government, derivatives from indices or against any securities. Let's say securities, HDFC and indices, Nifty, Bank Nifty. Loans they have offered to the any private limited company, let's say, through the loan agreement process or CLO, collateralized loan obligation process. and this is the cash. This would be your asset allocation. This comes under the asset allocation because this 100 crore investment that you have received as an investment, you have allocated to the assets, and now you have the assets in the books of account. And then all assets that we project, the asset side of a balance sheet, that's what we call asset allocation. We are allocating the funds to purchasing the securities and we are holding the investment. So that comes under the asset allocation part. Right. Few teams they work on this part as well. They do the asset allocation as per the instructions that they have received from the funds or the fund managers. As per that, they record all the equity trades, bond trades, derivative trades, loans, cash at bank, everything in the books of account, means in this accounting system. And that allocation we call asset allocation. Okay. So now you can raise your doubts if you have any. Otherwise, we'll start with the trade processing part. We have discussed the application structure. We have discussed the accounting structure, how they means how the accounting structure is formed there with the funds. Right? Now we'll start with the different processes, and the first process will be the trade processing. Take 2 minutes, think, and then raise your doubts if you have. The generic name that we all are using, which is NAV calculation. We all are calling by the similar name like NAV calculation, NAV calculations. NAV calculation, it means to do the accounting for a fund. Simple. If you go through the NAV formula, total assets minus total liabilities divided by total number of outstanding units, what's that? That's the balance sheet of a fund. Correct? Where you can see the total assets, where you can see the total liabilities, where you can see the total outstanding securities. On the asset side, on the balance sheet. And when your balance sheet will be means correct, when if you prepare the P&L correctly and trade book correctly, and before that if you go above, your journal entry should be correctly recorded. Then ledgers, then trial balance, and then your trading book, P&L and accounting. And that entire process we called NAV package, NAV calculation, fund accounting. Fund accounting would be proper one. See, once you prepare the accounting all the books correctly, the system will help you to calculate the NAV with the help of calculator. That's it. Just put the assets. Now, once you prepared your balance sheet, you know, right? So, what are your assets, liabilities, and outstanding units? Simple. Just put in the Excel, or system will help you to calculate. That's it. Total assets or total value. Total value, net asset value of a fund, investors, and even fund managers if they have invested. Then you can send that report to the investors. Okay. Okay, so are you learning, right? Something new or not? Or getting bored? Okay. See, this structure is nowhere mentioned. You can check the Google, or there is no books where they have defined this structure. And that's what means lots of professionals they are facing problems to understand the structure of this fund. Theoretical terms that you can learn any from even resources or books or fund books and all, right? But structure that we don't know how it's work, how they have developed this entire structure and all, and there we are facing problems. Okay. As a fund accounting team, now we'll start with the processes and we'll discuss only one process because almost will be 1 hour. Then after that, it's bit difficult to keep engaged with the session. fund fund accounting. Fund accounting comes under the fund admin, and under fund admin, you can see the different processes that we work on a daily basis. Trade processing, it means you can link with the accounting, which is not a trade processing, it's a trade book. Or you can say recording the trade entry. Trades and prepare the trade book. So on a daily basis, we prepare the trade book to record the buy and sell entries. Where we record in a normal term, if I ask this to you, where we record buy and sell? To the trade book, right? On a trade book, we record all the buy and sell purchases and sells that whatever we have made or fund manager made. Correct? So it means as a trade processing team, they work on, they don't know but where they are working. Honestly, they don't know. They are not aware about it. They're just aware about trade processing part. But actually, we are working on a, see, for every term, there is a accounting logic. Without that, there is no process. Your basic 12th standard and 11th standard accounting logic, they have applied behind or in the backend database. That's what you're working on a front database to creating these records. Okay, while developing the applications and all, the developers they sit with the accountant, qualified and professional accountants, CFO holders, and other professionals to develop this structure. But at the front, we just work on it. We just create the records. That's it. Another process would be income processing for a dividend interest payment, corporate actions. There's are, but yes, we're not going to learn all in today's session. We just target to the trade processing. What's exactly trade processing means? See, we have seen this here. The everyday fund managers they send the orders to the brokers for buy and sell. Correct? For buy and sell, they send the orders. Let's say the fund managers they are looking for, and you let's say you're working with this fund. What was the name of the fund? PIMCO. You're working for PIMCO. You manager send the instructions for to buy HDFC security. I'll open one document. Then that will be easy one to understand to you as well as for me too. Trades means buy and sell of different kind of securities and their codes on this the enterprise and application. It's the name of application. Important dates, related trades and all. The important part is what is trade? If someone asks, a trade involves multiple parties exchanging one's goods and services for a desired goods and services that someone else purchases for a predetermined price. It can be a security, futures, options, rights for shares, bonds, mortgage-backed securities, and any other financial product that can be traded with the other party on the market or over the counter. There are two types of market. The NSE, BSE, they are the markets where you can exchange the securities through electronic exchange platform. And apart from that, you can meet the customer or investor face to face, and you can also exchange it. That market we call over the counter market. Trades can be delivered or received free of principal amount if it is a transfer between the two related accounts, conversion and due to any corporate action and all. So forget this about corporate action part. We'll learn in the corporate action session. Okay. So the important reasons, just say this: insufficient securities at a broker to place a trade, principal amount not received or paid to the counterparty, incorrect or insufficient instructions to the broker, or securities given on a loan and all. This is not important. Okay. These are the parties would be involved in the transaction: seller, buyer, trading broker, clearing broker, and market exchange platform. Causes for breaks in the trades, timing issues due to bank holiday, incorrect booking. This is important because if you're working on a trade processing or middle office operation part, you can see the similar issues. And if you're a manager, the associates or subordinates, most of the time they record the trades incorrectly in your books of account or accounting platform. Just because of that, you can see the escalations from the counterparties or the other the reporting teams. They escalate that matter to the accounting teams or trade processing team. Hey guys, can you please check that if you have processed the trades correctly or not? Then manager come into picture, and then they investigate, ask for investigation and clarification and all. Incorrect booking, so it means can be recorded that XYZ recorded trades with the incorrect amount, quantity, price. As I mentioned in an initial time that entire industry work on the few things, that is trade date, settlement date, quantity, terms, interest payment price, quantity, transaction currency. That's it. 90% processes they work on a similar data. Missed to book a trade on time or completely missed, duplicate trades, cross currency trades. You are expecting in UR, GBP, or let's say any other INR or your currency EUR, but you have received trade in USD, or vice versa. The trade was for INR and the processor booked the trades for USD. This happened frequently. This happened. Okay, then security payment order adjustment. This is not the important one. So I just wanted to show you these instructions. You can see this under fund. If the fund manager trades, so they send these instructions. See this: trade date, settlement date, transaction type buy, quantity, security description, asset ID, currency of trade, price, commission, fees, interest bought or sold. If it is a bond, you can see the interest payment as well. Net settlement amount, broker, who is the broker that will help you to execute the trade, and settlement location. Settlement location, it means we have platforms like Euroclear, ClearPar, DTC or DTCC, right? Depository Trust Clearing Corporations, right? And we, apart from that, you can see the other platforms also. So these platforms will help to execute the trade or to process the communication from one to another or one counterparty to another. You receive similar instructions to book the trades into your books of account. If you work at a broker level, you receive similar instructions from the global training fund, from the fund that fund manager. Then you need to work on that instructions and send the instructions to the exchange to match the order. And once they match the order, then you can communicate to the fund manager. And if you work at a fund level, then fund manager, and you can check the fund manager instructions, as well as you can ask broker to provide instructions, that what instruction that you had received from the fund managers to execute the trade. And they send the data to you in a similar format, in this format. Then you can check, and this data actually we record in the accounting application. On a daily basis we record it. It could be buy trades, it could be sell trades. See the sell trades for a similar. Why we record this? Because if you don't record the buy and sell trades, then you won't be able to generate the gross profit that we calculated on a purchase and sales. Am I right? Guys? Right? So we received these instructions. We booked as per it, but at a fund level, we received instructions in Excel. We received instructions in such a format in Excel. These instructions were received from the broker. Once you received this, and these instructions will receive on T+1, not same day, or after close the market, you can say T+1. Trade date plus 1 day means next day. We received this. And what's your main job? To check whether the trades are new or cancelled one or for updation. New, cancelled. If it is a new, then it means it's a new trade that the executed at the front office. And if it is a cancel, it means that particular trade is already booked in your system and that you need to cancel and that you need to do manually. Right? So you can check this trades data, buy, sell. Then most of the firms, they have a macro which they use to upload all these trade details on the accounting system. And with a few companies, I have seen that you need to book all the trades manually. You need to actually means with the help of ISIN, you can enter into this system, check, go into the, under that ISIN you can see in the system, the structure would be, on this particular ISIN you can see the different funds, A, B, or let's say like we'll write the fund names, PIMCO, BlackRock, Blackstone, HDFC. Under that ISIN you can see the different funds. But it's your responsibility to check that whether these instructions are for PIMCO, BlackRock, Blackstone or for only HDFC or PIMCO. You can, in the SIP, they provide the fund name as well, because with this ISIN, they provide fund ID or fund name. I have seen both the things that you need to check before upload or book the trades manually in your system. See, this is shadow account that we are doing, right? Your fund manager send the instructions to the broker because your fund has a trading account or demat account with the broker. Broker will send the instructions to the particular concerned exchange and all, book the trades, take the confirmation on booking, and that confirmation sent to you means that the fund trade processing team, and they receive that instructions in this format. And once you receive, it's your responsibility to check the trades thoroughly. Thoroughly it means most of the time what happened, the trades that is already booked in the system, but we have still received it. It's like a duplicate data that you have received or entry that you have received from the broker. That also happened. Right? So you need to check and records under that particular fund. If let's say this is for PIMCO and these are the buy trades, you can see the types ISIN, trade date, NSE, BSE, equity, right? Then trade type, sell, buy accordingly, quantity, price, this is also important, and similar details that you require to book the trades. You can create the records, means accounting entry, right? By clicking on the particular tab, edit and all, and add it. Select the tabs like once you click on a create, select on a trade type, purchase, sell, select trade date, counterparty, who is the buyer and seller, and then put the amount, price, quantity, price, amount the system will calculate, and then close it. So it means if you do this process, you have created the accounting record successfully. That records will project in the reporting application. So if you download the report, you can see that transactions in the reporting format, that the cash actually added or quantity added to the reports or not. Okay, so check the funds, and let's say for Blackstone you have received instructions for a sell, so you can book the sell. Let's say for again BlackRock, again sell, buy. So you can means record the transactions accordingly. Sometime what happened, the similar security, let's say LSIL, we'll add one more. Buyer, seller. Buyer would be, or buyer is, let's say PIMCO, for example, PIMCO fund, and seller is BlackRock. If you are only entitled to do the accounting for PIMCO, then you can only record in PIMCO. But most of the time, that the trade processing team, they also provide ins accounting services to the other funds. Let's say, and the BlackRock is also in your scope to do accounting and all. So you need to record, buy and sell the trades accordingly in Blackstone deal as well. So you can click on a Blackstone deal and you can add the sell, because here you have already added buy. How you can add it? There's quantity, trade type, the similar record we created, this similar record. There is no change in it. You can see all the tabs, similar tab that we create in both the books. In the PIMCO for a buy, and BlackRock for a sell. That's how the Recon also done, that you can match the quantity from BlackRock to PIMCO and second verify and confirm. Here one more tab that you can see, which is amount. Just multiplication. The amount should be matched. See, if you do this as a trade processor, your job is done, because on a trade date that's done. But if you're working at a settlement side as well, you are settling the trade as well. On a trade date, we just record the trading accounting entry, but on a settlement date, we receive the instructions for settling the trades. But what will be in that case? In the system, you're gonna receive the similar document or instructions to us. For a settlement, you don't receive that in bulk. You received in a documents or in a notices that we received in a mail, right? Then in that case, what we do, we check it individual notification. Let's say we have received for a PIMCO, that is settlement date with this amount and all. The similar things we just entered, update the settlement date. If it is today's, update the date for both, and hit on the settlement button. Check the amount, everything that should be matched, and hit on the settlement button. On a settlement date, we received invoices or notices for a settlement from the custody, because custody confirmed that what they confirm, they have changed the ownership of securities from one account to another, and the similar way agent also confirm that they have received the fund against the securities. Let's say for a buyer, they will say the fund has been debited, and the seller, the fund has been credited. This is about fund. Asian bank. Custodian, they confirm as a buyer, the security credited, debited. That's process we call settlement. Once they confirm, then you're gonna receive the notice from them. And once you receive the notice, that you need to check that notice with the trade transaction that you have recorded. And if it is matched, you can confirm that this particular trade has been settled successfully. Once you update the settlement date, so that create a ledger. And once the agent bank release the payment, so this is your fund statement. Against the fund statement, you can match this amount because this is your ledger. So this will be done by the Recon team, or else if you are working on end-to-end, front-to-end process models, then you can also do the similar stuff. Okay. And if you see any mismatch in a quantity, that if, let's say you have received this notice from the custodian, actually custodian sent this, and you're seeing the quantity is something different, that is not matching. In that case, you can reach out to the broker or else any the middle team who is working as a as a middleman between you, and you can ask them to confirm the trade quantity. And if they confirm, so it means something happened from the your side, and you can ask the similar things to the fund managers and brokers to confirm the trade quantity, because as an accountant we require the evidence or the proof. Without proof you cannot amend anything, you cannot change anything. You need a backup or you need a written confirmation from a concerned team that they are looking for amendment by XYZ reason. It could be the possibility that later on something change happened at a front level, but they forgot to communicate to you. They have amended in the front office system, but they haven't communicated to us. So it means that still the changes are there, and that frequently happen. I have experienced this. And once you reach out to the custodian, they are confirming the different quantity. It means, see, in most of the cases, custodian record the accurate quantity. In your internal books of account, that the most of the people they made mistakes, and that's the reason we try to match with the agent banks. If it is a cash, then we match with all the cash payment we match with the agent banks, and all the securities that we match with the custodians. And if you see any derivatives and all, that we match with the brokers, because derivatives and all the brokers carry out, we match with them. Okay. And if you see this amount, particular amount is mismatched, that the, and let's say you have received in amount the statement with the lease amount, then you won't be able to match it very simply. Okay, do one thing. Fund instead, let's say ledger statement, and you have received, just because of different rate, Now you can see the change. The amount is received which is incorrect. You won't be able to match it. And even this is the incorrect procedure. Because later on you may see the reversal has been or the extra amount that you have received, then how are you going to record it? That's the reason before recording or confirming settlement, you need to check each and everything. And if it is any mismatch that you can see, then reach out to the concerned counterparty or the agent banks or custodian, provide the trade details that you had received the booking instructions with this price and why you have calculated or sent the payment with a different price. Here you can see the possibility which is due to later on some of the price has been changed and all they pick that price that happened, negotiation happened, and that you have not been informed. That's happened because we are an accounting team. Every time that nobody can inform to us, once you receive something then only we record it. Oh. Yeah, you've got. It depends on the cases, okay? Sometimes you can see the price is correct, but the quantity is different. Yes, your main job is to verify trade price and quantity under each and every process. We work on this too only. And for accounting purposes, trade date is very important. From a trade date, we start to apply the accounting treatment, and your trade date should match it. And if your trade date is correct, it means your settlement date will correct, and then everything will goes well. Simple, right? Okay. So this is all about trade processing, but in a trade processing, you can see the different two to three things, which is front office. See, at a front office, what happened? Fund manager sends instructions. Okay. To the broker. Broker accept the similar instructions from the fund. Right. And the similar process happened, which is that we have discussed. The broker sends instructions to the custodian. Sorry, the exchange. To send it means even broker can check that on a exchange terminal because they will have access. And they match it. Matched the trade. And once match, they send it to the again broker or counterparts, respective counterpart. And this team confirm, broker confirm to the funds team or manager team trade execution, about the trade execution. So this, once they confirm that process, we call trade execution. The point is order, whatever order that's sent by the that the fund manager, that should be matched with the order execution or trade confirmation. And once it is matched, this data will receive to the manager from the on behalf of fund, because the broker will confirm to the fund managers. On behalf of fund manager, you can see the middle office team, they work on it. Middle office team, they work on it. Why they work on it? Because let's say you are from PIMCO and the CPT is the BlackRock. So the PIMCO team on a on a T+1 day, they will send mail in such a format like this to confirm the trade that they are the buyer for your securities, or let's say they are the seller for your securities, and whatsoever it is the scenario, that depends on the transaction. And if they are the buyer, then you're gonna send. And if, let's say, if you're working at a middle office operations on a daily basis, we pull the reports and check the how many trades has been traded in the front office. You can check that on a centralized platform, which is DTC or maybe ClearPar, Euroclear, right? And pull the reports and check it, trades for previous days, how many trades are there in the reports, and send this mail to the BlackRock team. BlackRock team also, they can send the mails to you to confirm the trades, because from there also you can see the similar way of communication, right? And once they confirm, yes, we are the counterparts, we are the buyer for the securities, and if they confirm, then we will ask them to please make the fund ready. If they say yes, even similarly, they can ask you to confirm the security status. It should be in available status. And if it is not, then there, this trades cannot happen. Let's say they confirm, you confirm, securities are ready, everything is ready. Then the PIMCO team, they will ask them to settle. Means what exactly? Ask them to, this PIMCO team will ask to the BlackRock team, please send the instructions to the Asian bank to release the payment. To release the payment. And the similar way, the BlackRock team will confirm to you, please confirm the payment and send the instructions to the custodians. Instructions to the custodians to release the security. And once this happened, that process you can call, if this happens successfully, that process you can call settled, trade settled successfully. And where is settled? At a middle office. And once the trade settled, then only the custodians send the notification to the middle office or either accounting team as a proof of settlement. So it means this document will generate once the middle office framework will done. After that, this document will receive to us as a proof of settlement that the trade has been settled successfully. And if you denied, or if the securities is not available, or the fund is short or not available, in that case your security will be, or trade will be cancelled or failed. That's the reason middle office team, they work keenly on a communication part. They reach out to the counterparts, get the confirmation, right? They coordinate with each other to get the trade ready for a settlement and all, and then settle it. Settle it means the middle office work is similar, like to coordinate with the different teams to get the trade settled. That's it. And once even the middle office team, they create this single records in the system from a middle office side and from a back office side. Once they confirm, they send the similar record that you can see also in the back office side. And that's how you can do the recon, back office versus middle office. So that should be on the settlement date. You can put the settlement date. Both the teams, they update settlement date, and then transactions will be closed. You can match the middle office versus back office, do the recon. There shouldn't be any discrepancy, and if it is, you need to resolve that. You can coordinate with the middle office team, because that is from your organization. You can reach out, or fund, you can reach out to them, ask for confirmation or amendments and all. Or if something has happened from the counterparty side, then they can directly reach out to the counterparty with the help of the DTCC, ClearPar platform. Just you need to send the mail through that on that particular security, get the confirmation, update the system, and then the middle office team again similarly they will communicate to you, and then you can amend the system. So eventually the back office records should be accurate, and even middle office also, because for every level there will be audit and recon team that you can see they work on it on such a stuff. Here your process, the trade processing will be done. From an interview point of view, you can see the you may expect questions on how this processing stuff happened. So now I have explained to you each and everything from the beginning to end. The similar stuff that I have created, the system fields that I have created in Excel. You can see the similar fields while processing, actually processing on a system. Trade type, instrument type, equity, bonds, loans. It could be that we create this same process stuff. Because this should be correct, and if it is not correct, then it will have an impact on the cash flows. How cash flows? Because if you purchase, it means your cash flows will be decreased, and if it is sales, it means your cash flows will increase, and that is required to the fund manager to take the investment decisions. Because very next day, fund manager check the cash balance and accordingly send the request. And if the cash balances is not correct, and if we send the trades, send the instructions to the broker, and later on you got to know there is no fund, accurate means there is no fund in the enough fund in the account. So it means you have recorded any of the trade that you have recorded incorrectly. That's what the balance, that whatever that you have sent, or the cash flows report that you have sent to the fund manager, which is not accurate. This happens frequently. Okay. So the trading activity is the first activity that comes in the trade enemy package, or that the fund accounting stuff, because this is related to the fund trade book. And here that you can see the accounting entries. Purchase of securities. PIMCO side, if you are updating this in a PIMCO book, you are at a purchase, trade in security account, debit, or you can use other words like trade in stock, or stock in trade, trade in stock, or investment in securities. Other word would be investment in sec. Account debit to cash account. Cash account credit. In the description you can write the total QT. Let's say quantity is 10 at price rupees 10, the total would be 100. You can write that. But we have a gap and IFRS system where they have defined what should be the exact accounting entry in which case. Let's say in accounting system we follow two rules, and this is very important for an interview. And most of the interviewer nowadays are asking questions on this part, right? So you shouldn't be any confusion in it. I'll send the document for this, for accounting entries further also, but I'll explain this, what's that exactly. Trade date accounting, and settlement date accounting. As per IFRS, this is depends on you. Any of the accounting method that you can choose and do the accounting. Either trade date or else settlement date. There is no obligation. But as per GAAP, they are following settlement date basis. Accounting entry will be created on a settlement date only. And what would be the accounting entry in that case? This accounting entry you can expect. But here you can see the small change. What small change? If you are preparing accounting entry on a settlement date only, in that case, we have a accounting principle which is initial recognition. Initial, it means initially how you are recognizing to the assets. If you calculate this total quantity 10 and 10, so total price should be 100. Agreed? We'll record this 100. We don't have any issue. Debit and credit. But what if this happened on a trade date, right? And after T plus 2, which is settlement date, there has been change in the price. Which price? This 10 rupees. Now the price has been changed on a settlement date by 2 rupees. So it means the price is now, current market price is at 12. From the purchase level to now, the price has been changed. Then how you gonna record that 2 rupee change for per security? That should be recorded somewhere, right? You can unmute, guys, just respond. This is account and this is very important for both. Right. This only in a practical level also we do the accounting for hedge fund accounting and mutual fund or private equity accounting. We actually prepare the accounting entries, there's entries and we upload it. You can unmute. Just discuss with me. This is very important. How you can then project this the 2 rupees extra that you have means the value of 2 rupees extra that you are seeing on a settlement date. That should be recorded somewhere, right? Do you agree? Yeah, go ahead. Yeah. See, we are now, let's say we are recording the accounting entries on a settlement date basis. Okay. So on a trade date, you have purchased the security. The value was around 10 for each security, and you bought 10 quantities. So 10 into 10 was is around 100, right? But now as an accountant, you are doing the accounting on the settlement date. From trade date to settlement, there is a change in price by 2 rupees for per securities, and the current market price is 12. Yeah. Yeah, there is a twist. Okay, so that's what we do. We'll have to record. We'll have, as an accountant, we'll have to record the changes. We are here to record the changes. As I mentioned, we are here to record the changes. So total cash that we have paid to acquire that asset is 100. That actually gone from the business. You can apply the accounting rule, which is real accounting. Debit what comes in and credit what goes out. Correct? The total unrealized gain on the assets or investment is around 20, because 2 rupees that appreciation you can see on the invested assets. Correct? 2 into 10, if you can multiply, would be 20. and the current value that you are seeing means trade in security or investment in security amount that you are seeing, which is 120. That's how your debit versus credit should be recorded on a settlement date. Debit 120 and credit 120. Yeah, but yeah, go ahead. Yes, based on the current price. You're here to record the current changes. As an accountant, we record the current investment value only. What was the value in past? That doesn't matter for us. That is like nothing to do with that particular price. This matters when we are recording the transaction. See, this is a very important one, okay, very significant information, and even you cannot see that information anywhere because no one have posted any blog on this as well. Recently, I have posted it, and most of the interviewer they are asking questions on this stuff. They are giving you the scenario the way I have created it, and they are asking the accounting entries. Okay. Similar way, if you see, instead positive change, there is a negative change happened. By 2 rupees. Then how you gonna record this? Now you can tell me the accounting entry. Yes, instead credit. So this would be the debit transaction. So here would be, let's say, 2. You can means remove this 2. Say the buy, because credit debit transaction that we record with this buy. Right. Investment in security would be 80. Correct. 20, that is a loss that we transfer to the P&L. Correct. Instead this, remove this, and the cash, actual cash that the fund paid, mean that the fund manager paid to acquire that asset is 100. Now you can just do this calculation. 100. Okay. Yeah, apart from that, there would be 2 entries. If you follow the trade date method, this accounting entry happened on a settlement date. But if you do the trade on a, if you have decided to prepare the accounting entries on a trade date as well as settlement date, let's say if you are preparing the accounting entries on a settlement date, then you don't need to pass any accounting entry on a trade date. There would be only this, you can adjust it and pass it on a settlement date. But let's say the fund is following the trade date and settlement date, there's 2 different accounting entries, then you need to prepare 2 accounting entries. That on a trade date would be stock in, okay, trade in stock account debit to the BlackRock account, and on settlement date this would be your settlement date. settlement date. Then in that case, so the BlackRock on a settlement date, because actually cash will proceed and confirmation will done and all, right? Then the BlackRock, we are preparing this accounting entry in a PIMCO book, means the fund that you are working for. So make sure that, because sometime that will may confuse you to understand, by BlackRock account debit to cash account. Here you need to make this entries. That's it. That's 100, 100, 100, 100. This should be the accounting entry on a traded. That's what we reach out to this counterparty BlackRock to confirm the trades, and once the confirmation happened, then we process this part as well. And if you put entire things into the accounting rules, see, when you purchase something, it means that you have received. An investment is a real, right? It's a part of real account, and what the real account is, debit what comes in. The assets that you have received, so it means that should be debited. The BlackRock is the personal account, and what's the rule of personal account? Debit the receiver, credit the giver, right? So that's what. So this would be at a debited, and again, because this particular person that given the security to us in two ways, and a similar way. So now debit the receiver. So what the debit the receiver? The cash that the BlackRock gonna receive, and that cash we gonna pay it. Correct? Cash is a part of again real account that should be credited. Now here we are done, and with the trade processing, with accounting and trade processing. It's your time now to raise questions and for me to answer for your questions. Yes, apart from that, you can see if the broker fees and all, if it is applied, that you need to record. Because eventually that all will add up in the investment's fair value. Sometimes you can see the broker applied fees, right? 2%, 3% and all. That would be debited. How it would be, let's say instead is unrealized gain and loss. Broker fees. Broker applied. See, from a cash side, you will have to pay this 100, correct? The cash will proceed with the 100, but actually the amount that you are seeing in the account, which is something this, and the broker charge the rest, the broker charge which is 20. Fees all will be debited. It's like a production fees that we record in which account? Trade book account, right? Production related expenditures, wages. If you are from a commerce, then you can relate with this. If you have done accounting and all, or learned accounting in your academics, you can relate this with your academics account, that so whatever that you have learned. Okay. But still, I have explained it in a very, layman way. Right. And for okay, first of all, let me stop this recording.